There's a frequent misperception that fintechs seeking bank partnerships are trying to avoid regulations and oversight. But for most fintechs, that's far from the expectation. They just want to know what the rules are, and so do their bank partners, since many of the rules that apply to fintechs come indirectly through partner oversight. So when we think about ways to modernize and strengthen regulations for bank fintech partnerships, the cornerstone is setting clear expectations that align with the realities of this industry as it is today and as it may exist in the future. I think it all starts with recognizing the fundamental importance of the third party relationship in modern financial services, not just as a risk, but as an innovation and a place where banking can become more safe and sound and more consumer friendly. In the past few years, we've seen the federal financial regulators issue interagency guidance on third party risk management, and that's great and needed. But what aspects of these policy imperatives should be codified as regulatory standards? Stronger regulations could establish clear requirements, for example, when fintech bank partnerships wind down or where banks receive regulatory feedback that should be shared with their fintech partner, but that's technically CSI. One place we have seen a move toward modernized regulation is the FDIC's proposed rulemaking last year on record keeping for custodial accounts. But even in the proposal, we saw data formatting requirements that, if adopted, might not allow for future innovation and change that's inherent in this industry. So I think the emphasis should be on standards rather than highly specific requirements that could become outdated shortly after they're put in place. Ultimately, we modernize and strengthen regulations when regulations are actually proposed and when interested parties participate in the administrative process by submitting their comments and helping shape the final product.